Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao.
The EURUSD pair pulled back slightly on Thursday, but bulls held the support zone at 1645-1656. Therefore, a bounce from this zone today will favor the European currency and resume the upward movement toward the 38% corrective level at 1718. A consolidation the pair of below the 1.1645-1656 zone will increase the likelihood of a continued decline toward the support zone of 1594-1607. The wave situation on the hourly chart remains simple and clear. The last completed downward wave did not break the previous low, while the last upward wave broke the prior peak. Thus, the trend has officially changed to bullish. It cannot be called strong, but in recent months, bulls have shown only one thing: weakness. The Federal Reserve's monetary easing should give them additional strength, as the European Central Bank has no intention of lowering interest rates in the near future. On the 4-hour chart, the pair has returned to the 1649-1680 resistance zone. A bounce from this zone will again favor the US dollar and lead to a decline toward the 38% Fibonacci level at 1538. A consolidation of prices above the resistance zone 1649-1680 will increase the likelihood of continued growth toward the next Fibonacci corrective level of 0% at 1.1829. No developing divergences are currently observed in any indicators. The bullish trend has every chance of recovery.
Let's trade with the MACD indicator. It's time for GBPUSD. Jakub Novak presents.
You could plan to buy the pound today upon reaching an entry point around 1.3353. Targeting a move to 1.3380. At around 3380, you could intend to exit long positions and open shorts in opposite direction, targeting a movement of 30-35 pips back from the level. Before buying, make sure that the MACD indicator is above the zero mark and just starting to rise from it. You could also plan to buy the pound today if there are two consecutive price tests of 1.3333, while the MACD indicator is in an oversold area. This will limit the pair's downside potential and lead to an upward market reversal. We can expect growth toward opposite levels of 1.3353 and 3380. You could plan to sell the pound today after the 1.3333 level is updated, which will trigger a rapid decline in the pair. The key target for sellers will be the level of 1.3309, where you could exit short positions and immediately open longs in the opposite direction, aiming for a movement of 20-25 pips in the opposite direction from that level. Pound sellers will likely emerge weak data. Before selling, make sure that the MACD indicator is below the zero mark and just starting to decline from it. You could also plan to sell the pound today if there are two consecutive price tests at 1.3353, while the MACD indicator is in an overbought area. This will limit the pair's upward potential and lead to a market reversal. We could expect a decline to the opposite levels of 1.3333 and 33.09.
That's all for today. See you online soon.